Hey everyone, time for the market review. And we are back at last week's highs, on Friday's highs, slightly above it. Main culprit is small caps. And this doesn't really change things that much for my expectation for this week. I still think we go more or less sideways, but the bus is up otherwise. Main piece of information is VIX at 15. VIX is green in spite of the market moving up today. And when we look at the VIX positioning, we see that the largest part of the expiration, this is open interest, is for this month, like on the 20th, third week of the month, third Wednesday of the month, which this time is the 20th, so after OPEX. And 15 is the biggest level here for puts. I don't expect we lose 15, but if we lose 15 and go to max in the money puts, it will be 13. So if somehow we get to 13, that's the point where we can load up on VIX calls and market puts in a more substantial way. And from a daily perspective, right now market is at like 610 or what, 616. So we are here right now, virtually in the middle between two big levels, one 5940 and the other one is 6075. One of these will probably be our magnet today. The market is going up right now, but I still think we have the potential for 5940. And the main target is this AV up here, which is around 590. And I think we will hit this AV up, although it will go slightly higher over the next couple of days. We will hit it this week. If we go higher, that will be like 605 for SPY. If we are to hit this 6075, that's around 605 for SPY. Given how huge of extension this is relative to the AV up, this is a instant short. I would get like 1 DT puts, depending on either 0 DT or 1 DT if we hit it, depending on how much time is left in the day. If there's little time left in the day, I'm not going 0 DT puts. So yeah, if we hit this somehow today, I think it's a slam dunk put play, and that's kind of it. I would still think we would hit this AV up. This will go probably higher. Like instead of going it like this, it would be something like it will go to 594 for this other level here. So this is kind of the expectation. Moving beyond this, the window of weakness is next week, where we have Nvidia earnings on the first 1 week from Wednesday. This week we have CPI data on Wednesday, PPI on Thursday, and on Friday we have retail sales. CPI is going to be the biggest one, obviously, and Nvidia earnings next week. Now, if the market is weak going into the last week of the month, this is Thanksgiving week, this is a public holiday on the 28th. If the market is weak and we are, I would say the target would be 580, near 580 in this week, we have the potential to bounce or the potential to break down. If we break down, then we will likely go down to 550, and the target, the calendar target for this would be somewhere around December. So we should hit a bottom, no, December, around Christmas. We should hit the bottom around here. So this is the bear scenario in which we go down into year end. And I would expect we start a rally just around Christmas, and we will go up for something quite vertical, meaning we are at 600, we go to 550. I would assume we hit 600 again by January OPEX, which would be the 17th. So we would have a huge rally starting here and going for a couple of weeks, like 3 weeks, 4 weeks. If we bounce on on Thanksgiving week and bounce here and start going up. I expect we go up until year end. So probably the first week of January actually. And target will be something around 620, 618, 620. And then we start a large correction here. Uh, I don't know what happens or how big it will be, meaning baseline is 10%, but a lot can happen until this time here. We have lots of economic data. We have another large FOMC meeting. We have a lot of things that can go wrong in the Middle East and so on. So lots of things is happening in this until then. It's hard to make an estimate, but target would be a rally starting from Thanksgiving until the first week of January, and then a significant correction. We go into a large window of weakness because of a yearly expiration on individual names. And even though the market has not the positioning has not looked bullish, individual names have looked bullish. So the fact that we get into yearly expiration in January is a major sign of worry for what happens next. What happens after this correction is going to be decided then. Like I cannot make any speculation, but just like we did in 2020, no 2022, sorry, when we started the correction here, we went down quite a bit. How much was this relative to highs? Like 15% probably, like 12%. Then we bounced, and we will do this for sure as well here. Whether this second leg comes in is the question here, or more or less, actually the second leg that can happen as well, like to get a W, like we do this, and then we go higher. Whether we do something like this and have a breakdown and another leg lower, that's the question. But yeah, that's kind of it. It's too early to tell. And for now, expect the market to pull back to 590 to hit that AVU up, even though we can go higher first. The higher we go, the better the entry will be for a potential move to retest the AVU up. So if you get December puts, this should be more than enough time for this to play out. I think it's a low risk play, even though it can go red in the short term. So yeah, and again, if you get into this play, then be very take profits very quickly, and if it goes green, set a stop loss at green. And yeah, that's it for this week. Have a good one. Bye bye.